Welcome to Bears in Exile. Today is Friday, September the 28th, and this is the weekend market overview. Looking at all kinds of stuff. Well, I go through the spiel, I don't think I've done it all week, so I'll just get into it. I'm hoping to do a Vegas baby this weekend. Hopefully nothing will come up. Maybe do a few other things too, but we'll see. Last night we were saying impressive move by the Bulls, but the Bulls were not out of the woods. And today I think that did play out pretty well. Starting off with the Dow, down almost 49 points. And we can see here, it is a hammer, bottom of a possible range, which, isn't the greatest thing for the Bears. And not quite getting to the long-term moving average bar. Beyond that, we did exceed the 50% area from yesterday's candle, which is good. This is not the same across the board, so it should be noted that this is different. But that it was able to do that, bearish. New recent low, bearish. Below the middle Bollinger Band still, bearish. Beyond that, however, we have the 14-day RSI moving average still moving up. It can still catch everything else and send it higher for a bounce if it really wants to. The candles would definitely suggest that that was indeed possible. One of the reasons why, well, of course, I'm not psychic. I didn't know that this candle was coming. But back here on this day, I said I don't trust the Bears into the weekend, and want to see what happens at the beginning of this coming week. We're still at the precipice of a fall potentially, and I'm going to show why I think that. So we have the fast stochastic bumping up, we have the RSI trying to bump up, but we're still moving down. Slow stochastic, CCI, MACD, and the MACD histogram. Just a little bit concerning that these can turn and we can get a secondary reset in accordance with the 14-day RSI moving average. But beyond that, I mean, it was not a bad day for the Bears. Actually did some pretty good damage. So kudos to the Bears. 60-minute time frame. Had the nasty drop at the open. Climbed back up, gave some back. Nowhere near the lows of the day, but still not a bad showing. Beyond that, we have the 14-day RSI moving average moving up along with the stochastics. CCI is confused, RSI inching up, MACD inching up, MACD histogram inching up. So, like I'm saying, this, along with the candle, 60-minute time frame says we definitely could get a bit of a bounce. Need to see Monday. But overall, after we get a bounce, 60-minute time frame, once you go back to the daily and the 14-day RSI moving average is finished, you could have some really nasty problems. To show that, I'm going to go to the DIA just so that I have good volume information. DIA being the ETF of the Dow. And everything's the same. I mean, the candle's a little bit different, spinning top, but everything's the same. And if we go into look at the volume once again, which we've been doing the last couple of nights, you can see that the situation is not improving. As a matter of fact, I'm thinking of a different chart. But beyond that, we're still moving down in all aspects. All aspects are getting worse. The interior structure of volume. Unless some huge buyer comes in, maybe it's been, this is not looking good for the intermediate time period. So close to getting across of the unbalanced volume, close to getting across of the volume weighted MACD, and chopping away at volume price trend, accumulation distribution, and dual volume flow. So it's not tomorrow being Monday, but it's getting close. Something to keep in mind. Moving on to the Dow Jones Transports. Been looking at that the last few nights as well. Today making a new recent low. Very bearish. And closing below all of this. Also bearish. 14-day RSI moving average, stochastics locked low, CCI semi-low, going sideways, down on the RSI, slightly down on the MACD histogram, and down on the MACD. This is not good. Not good for the bulls. Matter of fact, with today, the next place that it should be going is right down in here. And right down in here. 4,800. We talked about that before. And wrong one. Internal structure of volume on the Dow Jones Transports. We are still all 5 red. All 5 red. Do we see any improvement on any of them? No, we do not. There's no indication that this is going to improve at this time. Going on to SPX. Now, unlike the Dow, SPX did not exceed 50% level on closing from yesterday. Did pierce. It's a good thing. Not that this is the biggest green candle in the world, but still is what it is. We can see the 14-day RSI moving average still moving up. Fast stochastic moving up. Down on the CCI, down on the slow stochastic, up on the RSI, different than the Dow. Down on the MACD, down on the MACD histogram. The concern being, can this get a pop before it tries to go down again? And the answer is yes. Very, very easily. Going to SPY, look at the internal structure of volume with the S&P. Notice that everything's essentially the same. I mean, a few minute differences to SPX, but really it is the same thing. And looking at the internal structure of volume, look at that. First red, volume weighted MACD. That is the choppiest. It's more unreliable than most, but it just shows that things are getting worse volume-wise. Very close to a cross of the unbalanced volume, very close to a cross of the dual volume flow, and chopping away accumulation distribution, chopping away volume price trend. So, we're still very much in a danger area. And UUP, the dollar. This one did really well today. I was surprised and happy about how well it did. Almost getting back, actually it did, it got right back to the top from Wednesday. Excellent. And look at that, barely backed off. That is bullish. That means it's just sitting there waiting to break that previous high. So for the moment, absolutely, this is bullish. Bad for the market. Everything is moving up. Everything. Matter of fact, might as well look at that just for fun. Wednesday, Friday. Actually, this will be the third attempt at breaking it. Happened today, and if it goes for a fourth, I think the fourth will probably do it. Might back off a little bit more before it goes for it. Heck, it might fail before it goes for it. But nonetheless, this is pretty darn good. pretty darn good. And we're getting a reset in the MACD histogram. Yeah, we need a little bit more on other things, but still, it's trying to get enough strength to actually finish, and that's also encouraging. It'd be nicer if the stochastics were a little bit lower, maybe even the CCI dipping down and the RSI dipping down first, but I guess it doesn't really have to, so shouldn't read too much into that. But daily, absolutely fantastic on the dollar. Fantastic. GLD, gold. Not the worst day. Certainly not the best day. Spinning top. 14-day RSI moving average hesitating before it goes down. We are doing the secondary reset where the stochastics are going back up. RSI is going back up. CCI got up, fell back a little bit. But MACD pointing down, histogram ticking down. I think this is just a matter of time. Just a matter of time. Something would have to happen over the weekend to really change this. But this looks very questionable to me. And XOI? Nope, I don't have XOI anymore. USO oil. Yeah. Look at this sucker. It is a doji star. Still have 3 days to complete this uptick target. 14-day RSI moving average moving down. Stochastics up. CCI up. RSI not really up. Up on the histogram, still down on the MACD. If it can just barely inch up, maybe even make that uptick target, and it still just looks like, you know, little tiny candles, we get the secondary reset completed up here at the top. This sucker is in dire straits. That new recent low should be retested. Might take a few days before it really gets underway. To do that, that's okay. It's not on a time limit. The uptick is. CompQ, the NASDAQ. Spinning top today. Not nearly as strong as the Dow or SPX. And with the exception of the RSI and the fast stochastic, everything is pointing down. I don't even think this is going to get a full secondary reset. This looks poor. Very close to the long-term moving average bar. And very close to our first real resistance. It actually has already been broken. So it should be able to slice right through that once it's time. And Apple, weekday for Apple. Still needs to come back into this level and break it, but really not good. Everything's still pointing down with the exception of the RSI and the fast stochastic, but nope, this does not look very good. And Apple, of all things, you'd think that it'd be you know, cream cheese for it to pop back up, but and GE, strongest on the Dow. Everything's still pointing up. Did make a new recent high today, was unable to close there, but still bullish. Spinning top, indecision. There isn't really too much at this stage that is bad with this. So, of course, no downtick. This just needs to cook a little bit more. And I think that it will give a good sign when the time comes. But for the moment, not something that I would be too inclined to bet against. JP Morgan, most important bank. Also not doing that great today. Closing, piercing lower than yesterday. Spinning top. And yeah, there's a couple things. Fast stochastic pointing up, 14-day RSI moving average pointing up. When that one turns, it's all over. RSI ticking up, but histogram, MACD, slow stochastic, CCI all pointing down. I mean, I don't trust the bears going into the weekend, but at the same time, I'm not counting the bulls out until we have just a massively big flashing sell sign. Just at the edge. That's all there is to it. Right at the edge. And XLF, the financials, very similar to JP Morgan in their candle and their formation, but 14-day RSI moving average pointing down, fast stochastic up but holding still low, down on everything else. 14-day, I'm sorry, regular RSI ticking up slightly, definitely weaker than JP Morgan. A matter of fact, looking at its internal structure of volume, we can see that we are right on the edge. Red on the volume weighted MACD, starting to cross of the unbalanced volume, right at the edge of crossing the dual volume flow, and closing in on the volume price trend and accumulation distribution. This is right on the edge and really tipping over the edge at this very moment. And is there anything else you need to look at? I don't think so. I hope to do a few more videos this weekend. But, yep, for the moment, that's going to be it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.